Here's a question nobody in finance is really asking right now. That is, what happens to a population of 90 million people when their government turns off the internet, their currency loses 75% of its value in 12 months, and their power goes out for 3 to 4 hours every single day, and then military strikes begin? The answer, as it turns out, is they run to crypto. Not because crypto is trending, not because they read a white paper, because when every institutional system fails at once, when the bank can't send money, the rial is worth less every hour. The lights are literally off. Borderless, permissionless money stops being a financial product, an option, and starts becoming their very lifeline, their infrastructure. Hi, I'm Jess, and what's happening in Iran right now is the most important real-world case study in monetary collapse and digital asset adoption we have ever seen in real time. And it connects directly to a much bigger conversation happening at the macro level, one about whether the global monetary system itself is approaching a reset point, which I believe it is. And that's what we're unpacking today. And here's the short version. Iran's currency lost nearly half of its value in 12 months. Daily rolling power outages have been hitting the country for over a year. When economic protests erupted in January, the government cut the internet for 92 million people. And then on February 28th, US and Israeli forces launched coordinated military strikes. And that brings us to the current day. Because in the middle of all of that, currency worthlessness, power outages, internet outages, and bombs falling, Iranians moved their money into crypto. We saw withdrawals from Iran's largest exchange spiked 700% within minutes of the first strike. Chainalysis documented a parallel crypto economy worth $7.78 billion operating alongside, and increasingly instead of, the official financial system. Two monetary systems running simultaneously. The rial, which is functionally dead, and crypto, on the other hand, which actually works. So that's proof of concept. And it's the entry point into a much larger, more important conversation. And here's where I want to connect Iran and what's going on there to the larger macroeconomic picture. Because Iran isn't a fringe case. It's an accelerated version, actually, of a pattern we're seeing unfolding in slow motion everywhere. The phrase, you may have heard it, global monetary reset, gets thrown around in certain corners of the internet in ways that are often sensationalist. So let me give you the actual evidence, okay? The data points that serious institutional analysts are tracking. Evidence point number 1, central bank gold accumulation. Since 2022, central banks globally have been purchasing gold at over 1,000 tons per year. That's 3 times the historical average. This accelerated dramatically after February 2022, when Western nations froze Russia's central bank assets as part of Ukraine's sanctions. That event sent a clear signal to every central bank on earth. It said, if your reserves are held in dollar-denominated assets inside the Western financial system, they can be confiscated. Overnight, the dollar's share of global foreign exchange reserves has declined from roughly 71% in 2000 to 58.4% in Q1 of 2025, just last year. The World Gold Council found that 73% of central banks expect to reduce US dollar exposure in their reserves over the next 5 years. And here's evidence point 2. De-dollarization infrastructure being built at the same time in parallel. BRICS nations, now expanded, are actively building non-dollar trade infrastructure. They're trying to move away from the dollar. And China's development of yuan-denominated commodity settlements and Russia's commodity-backed currency experiments, the BRICS New Development Bank has set a target of 30% of its lending in local currencies by 2026 this year. Panda cards, WeChat international payments, systems designed to route around SWIFT and dollar clearing. These aren't conspiracy theories either. JP Morgan has explicitly called the growing demand for gold and Bitcoin the debasement trade, a portfolio strategy driven by concern about fiat currency purchasing power across all major currencies, not just the rial in Iran. And here's evidence point 3, the US debt trajectory. US national debt went from $250 billion in 1971 when Nixon closed the gold window and ended Bretton Woods to $38 trillion this year. The interest on that debt alone has tripled since 2020, and it now costs more to service the debt than to fund defense or Medicaid. That's not a political statement. That's arithmetic. And arithmetic, unfortunately, has consequences. And evidence point 4, Bitcoin's emergence, its rise as a strategic reserve asset. The US now holds a strategic Bitcoin reserve. El Salvador formerly holds Bitcoin as a national treasury asset and publishes on-chain data. Brazil, Japan, Poland, and Pakistan all have proposed Bitcoin reserve discussions at the legislative level. And Russia, even Russia is using crypto and sanctioned trade. And Kazakhstan is exploring crypto reserves backed by national funds. So this is the pattern we're seeing. Countries facing sanctions, currency pressure, or strategic diversification needs are all independently arriving at the same conclusion, that a non-sovereign, censorship-resistant, finite supply asset has a role to play in the new monetary architecture. Now, does this mean the dollar is going to collapse tomorrow? No, it's not. The dollar still has enormous structural advantages: liquidity, legal infrastructure, network effects. Not to mention the world technically operates off of a debt economy, you could say, and the dollar is the underpinning, still, denominated currency for it. But it does mean, however, that the marginal direction, of travel for global monetary systems is towards something more diversified. It's moving away towards something more digital and less dependent on any single nation sovereign's goodwill. So you see a splitting of financial worlds happening literally before our very eyes. And this war in Iran is accelerating it. And that's also the lens through which Iran makes sense. It's not an outlier, it's a preview. So I want to give you one more data point that's going to help make this all so much more concrete for you. Because Iran isn't the first country to go through this pattern. We had Lebanon in 2019. Lebanese banks froze depositors' accounts. Withdrawal limits were imposed. The Lebanese pound collapsed, and people who had their savings inside traditional banking systems lost access to them. And sometimes permanently. The damage was catastrophic. And here's what happened in crypto. Peer-to-peer Bitcoin and stablecoin trading exploded. Telegram groups ran underground markets. Corner stores started accepting Bitcoin. Remittances started flowing through crypto rails. An underground parallel economy kept functioning while the official one died. So Iran's rial crisis right now is described by financial analysts as mirroring Lebanon's 2019 collapse almost exactly. The same banking restrictions, the same currency slide, the same desperate search for anything that holds value. So there's a pattern here: Argentina, Turkey, Venezuela, Lebanon, and now Iran. In every case, when the official monetary system starts to fail, people don't wait for permission to find an alternative. People are designed to survive. And so they will find a system that does work. And increasingly, that alternative includes crypto. And Crypto Slate's analysis puts it plainly. Bitcoin's appearance in these discussions, they say, suggest that monetary systems are no longer viewed as fixed or unchangeable. People are realizing there are alternatives. And that is an extremely profound shift, because for most of human history, money was whatever the sovereign, whoever was in leadership, said it was. You as a citizen, as a participant of society, didn't get a vote. But when the rial goes to 1.6 million to the dollar, and the ATM limit is $1.83 a day, the citizens of that country are voting with their wallets whether the sovereign likes it or not. So the question for Bitcoin specifically is, does the protocol hold up under this kind of pressure? And the evidence from the last 60 days in Iran is yes. The network kept running and continues to. The people who had self-custody wallets could move and can move money even when the exchanges were shut down. even when the internet was restricted, and even when the government was trying to close every exit. So sad and wrong. So this isn't a price argument that I bring you. This is a utility argument. And in the long run, utility is what drives durable adoption. So now let me tie this all together for us. Right now, Iran is showing us three things simultaneously at the same time. First, what they're showing us is that fiat, monetary systems don't fail gradually and then recover. They fail gradually and then suddenly. The rial's collapse wasn't a surprise to anyone paying attention. The energy crisis didn't appear overnight. The internet blackout was a response to protests that were themselves a response to economic conditions that had been deteriorating for years. The system breaks slowly and then all at once, and that's what we're seeing right now in real time in Iran. It's an incredible marketing campaign, you could say, for crypto and Bitcoin and crypto technology. And then secondly, crypto's censorship resistance is not theoretical. It's being tested in real time, in real conditions, under a government actively trying to shut it down. The exits were partially closed. Some people couldn't get out. But the people who understood self-custody, who moved before the door shut, who knew how to use the rails, they had options that their neighbors didn't. And this is why I would say it is so important, more than liking my video. What I care about more is that you share my videos with new people, because that is the goal of my channel. I don't want people to get left behind. I don't want people to get locked out of their bank accounts and have all their wealth tied up there. The knowledge I bring here at my channel and spend so much time making digestible for you and for everyone that watches my videos is with this purpose, is to make sure people now and in the future have options and know how to move their money out of their collapsing systems, because what we're seeing right now is a domino effect and it will continue through other nations. And then, thirdly, Iran isn't alone in this direction of the monetary system reset, as I was saying. The gold buying, the de-dollarization infrastructure, the strategic Bitcoin reserves, the city custody announcement I covered yesterday, the $38 trillion in US debt, and the Fed trapped between a war and re-accelerating inflation. All of these points point toward a world where the existing monetary architecture is under more stress than it's been since Bretton Woods collapsed in 1971. But mind you, none of what I'm sharing right now means the dollar dies next week. None of this means Bitcoin goes straight up from here. The fear and greed index is at 10 as of right now, as of today's video, which is an extreme fear territory. And Bitcoin is trading around $66,500 in the middle of a war-driven risk-off environment. But here is what I will leave you with and what I want you to think about. Every major monetary system transition in history has felt from the inside like chaos, like volatility, like uncertainty. The transition away from the gold standard felt this way. The emergence of the dollar as a reserve currency felt this way. And the birth of the euro felt this way. So what Iran is showing us right now is what the early stages of a monetary system transition look like, but from the ground level, not in an economic textbook, but in the lived experience of 90 million people who woke up one day and found out their money didn't work. Bitcoin was designed for a time like this. Whether you believe in the 4-year cycle or whether you think the cycle is dead, as do I, and we're in a new institutional era, which I do believe we are, the fundamental thesis hasn't changed. Bitcoin is scarce, borderless, permissionless, censorship resistant. This week, 11 million Iranians on Nobitex didn't need to understand any of that theory. They just needed it to work, and it did. That's it for today's video. I love you guys so much. Let me know what you think in the comment section, and I'll see you guys here tomorrow.